Hello traders, Gary Wagner here. It is 12:45 in Honolulu, 6:45 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 27th day of September 2024, and this is the evening report for gold and silver, our weekend review. After 6 consecutive days of price gains in gold experienced a moderate decline of $14.30 today, taking the most active December contract to $2,680.80. However, on a weekly basis, gold still banked a strong gain of $33.70. Silver declined by 39.5 cents. That is a drawdown of 1.22%. taking the most active December contract to $31.91.5. Fractional dollar weakness did temper the decline in both gold and silver, with the dollar declining by 0.12%, taking the index to 100.489. After 6 consecutive days of a near parabolic move in gold, it doesn't surprise me that at some point traders would step in to take profits. And on today's show, I want to explore that possibility and look at price points gold in fact could trade to if today's $14 sell-off signals a correction. We are looking at a daily candlestick chart of gold futures with our current Elliott wave count. If we see further selling pressure next week in our Elliott wave count, because we had such a deep correction for what we are labeling as a corrective second wave, we would expect this upcoming fourth wave to be a shallow correction. To that end, what we have done is first created a Fibonacci retracement from the totality of what we're labeling as a third wave. From there, we've calculated from each potential conclusion, meaning if gold trades as low as $26.35 or as low as $25.90, where a fifth wave would conclude if gold does correct next week and finds support at $26.35 and concludes a correction, that would take gold to $2,768. The other projection looks at this last rally and projects a deeper correction of 38.2%, which would take gold to $25.90, and our fifth wave was equal to our first wave. That would take gold to $2,720 at the completion of this current impulse phase.
Looking at a 4-hour candlestick chart of silver futures, I am going to put up our intermediate wave count. I believe we have completed our third wave in our intermediate count. Our minor count for silver has us completing a fifth wave, and as such we can expect a corrective phase to follow. In our higher degree, we just completed our third wave, and our fourth wave also expects a correction to follow. Where could we correct to? A general rule of thumb is the fourth wave usually corrects to around 38% of wave 3, which would take us to approximately $31.10. Traders that went long silver, we recommended raising our stop to $30.98. It is time to pull profits from silver at current market prices and wait for this fourth wave to complete before entering a long position. We are expecting a further decline in silver down to around $31.10.
This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.